U.S. Stock Market, June 18, 2025. Thank you for reading our news. Please like and follow us for daily news updates. Market overview. Indexes showed minimal net movement as investors digested Fed commentary and geopolitical developments. The S&P 500 closed nearly flat at 5,980.87, down 1.85 points. The Dow Jones Industrial Average edged down 44.14 points, 0.1% to 42,171.66, and the Nasdaq Composite ticked up 25.18 points plus 0.1% to 19,546.27. The Russell 2000 outperformed, rising 0.5% to 2,112.96. Trading volume was moderate, reflecting caution ahead of key data releases later in the week. Key drivers. Federal Reserve stance. The Fed held rates steady but signaled uncertainty about future cuts. Chair Powell's hawkish comments on inflation and tariffs kept markets subdued despite some expectations of rate cuts this year. Geopolitical tensions and ongoing Middle East tensions. Israel-Iran led to oil price swings. Initial gains gave way to a roughly 1.5% drop in Brent to $75.31 after diplomatic signals, affecting energy sector sentiment. Economic data signals, weak retail sales, and mixed labor indicators tempered risk appetite. Treasury yields declined modestly, 10-year down to approximately 4.365%, 2-year to approximately 3.939%, reflecting that geopolitical concerns outweighed debt worries. Notable stock movements. Energy and industrials. Given oil's volatility, major energy names saw mixed intraday swings. However, no single large-cap dominated headlines on June 18. Tech stocks, with indexes flat. Megacaps largely held ground amid shifting bond yields. Specific big tech moves were muted as investors awaited clearer Fed and trade signals. Advice for traders. Manage event risk. Use appropriate position sizing and stop-loss orders, as Fed communications and geopolitical news can trigger abrupt swings. Monitor macro and geopolitics. Track Fed speeches, inflation data, and Middle East developments closely. These remain key market drivers. Diversify sector exposure. Balance portfolios between defensive, for example, staples, healthcare, and cyclical names. Avoid overconcentration in sectors vulnerable to rate or oil swings. Stay nimble. With the S&P near prior highs but volatility elevated, be ready to rotate into beaten-down quality names on dips and trim overheated positions if catalysts falter.